All right, fantastic. Good morning, everybody. How are you doing today on a wonderful Thursday, October 12th? Welcome to Coffee with Marcus and Mark. Hey, Mark, good morning.
Hey Marcus, good morning. Good morning, everyone.
All right. Well, I'm glad that you're here. Today is Thursday. As you know, we are not trading on Friday. So today, the last day of this week that we'll have coffee together and then we'll meet again next week. All right. So today will be an exciting session because we want to show you or something cool on PowerX Analyzer. And then also we are here to answer your questions. But let's see who here wants to make money with trading. Type in a yes in the chat box. All right, fantastic. Good. Now let's see who here wants to make so much money with trading that you can quit your job. All right, yeah. And who here wants to make so much money with trading that you can travel the world and live the lifestyle you always dreamed about? Absolutely, absolutely. Yes, we want that for you. Because you see, for most of you who are here with us today, this is going to be a long-term relationship, I promise you. Because once you see how easy it can be, once you see a simple way to trade, and once we show you that you can do this too, and once you see results, you're going to want to hang out with us for a lifetime. All right, so let's see what is going on in the markets here today. First of all, let's take a look at the economic calendar here. So this morning we already had PPI and the unemployment claims as well as core PPI coming out. And Mark, look at this, slightly better than expected. I mean, PPI in line with expectations, unemployment claims, and core PPI a little bit better than expected.
Yeah, some decent data coming out this morning, and it's interesting because we do see that the even the S&P and the even the Nasdaq are drifting slightly lower. So even though the data was positive, you trade what you see, not what you think, because things are pulling back a little bit. We'll see where we start and what happens at the open.
Yeah, absolutely. Because if you look at the indices here right now, it's exactly as you said. So we're pulling back, and again, this is the paradox. So we have better than expected data. So why would the indices pull back? I mean, Mark, on better than expected data, wouldn't you think the indices go up?
And that's the thing. If you pay attention to what should happen, it will drive you crazy in the markets because it could be that it wasn't as good as expected, or even though it was good, or it could be that good data actually has an impact on other things like interest rate hikes and what the Fed will do. So that's really why you have to pay attention to what the markets are telling you and not necessarily what you expect the data to be.
Right. Now, also looking at crude oil here, very interesting. Today we have the crude oil inventories report released. Usually it's on Wednesday, but since on Monday there was a bank holiday, they're releasing it today. And it seems that right now crude oil is pulling back. I mean, down almost 2% ahead of the report that's being released today.
Yeah, it looks like we're drifting back towards that 50 mark, and so we'll see if crude inventories today have any impact at 11.
Yeah. Okay, gold slightly up, 0.5% here, and bonds just slightly up around the unchanged mark. And again, with bonds, we have this inverse relationship between the indices. So when the indices are pulling slightly down, bonds are slightly up. So this is absolutely normal what we see here. All right, so we'll see what the day brings for us as day traders. Um, I wanted to answer a question or show you some trick regarding PowerX Analyzer. So I know that many of you have PowerX Analyzer, and many of you have probably also seen the most recent update that we released, where we have more useful information in the data window here. Um, anyhow, when you ran PowerX Analyzer yesterday, you might have one or two stocks that are coming up. For the settings that I'm using, I had REV coming up with a sell signal. So this is the one stock pick here that I had this morning. And Mark, what do you think looking at this chart here of REV?
You know, REV is interesting. Just looking at the chart itself, I do see that big gap back in January. It actually was in our favor. another gap in April, and even going back to where we just see black bars, but still part of the chart, there's a gap too. So it's a little more gappy than I I personally like to see. I'm sorry, Marcus. I pulled up my wrong. You're probably wondering what I'm talking about.
No,
I thought I had it up on my computer, but I was looking at another stock. So there is a gap. There is a gap, but not the three that I mentioned. And we see that there's this big run up recently, and now we're getting a sell signal. I mean, this is one where I do look at the numbers and also see the positions that I have and if I really want to pick up a position or hold off.
right. So yeah, it's a maybe. I mean, it's not the strongest one, and you see, sometimes this could happen. So let's say today you're seeing REV, and it's not the best one. But then you might have seen one that was on the scanner a few days ago. And I want to bring up one that was on the scanner a few days ago. It's MTRX. So MTRX was one that came up a little bit earlier on the scanner here. And as you can see, it has this extremely high risk-reward ratio of 1 to 10. You'll also see that here, even though 3 days ago we saw the first time that it had a sell to open, we never got triggered because prices never moved below the low of this bar, which is one of the rules. So we still do have an active sell signal here. And so if this is a stock that you have been watching a few days ago and you said, oh my gosh, I like this, you tried to enter and you did not get into a trade, it is still a valid signal on the next day. So if you put it in your watch list, let's say a couple of days ago, and you're checking it and it's still there, you can still trade it. Because recently I talked to a student who said, well, you know what, I'm not getting as many signals. Well, no problem, because if you liked the stock a few days ago, tried to get in and did not get filled because it never moved below the entry price, it is still a valid stock. So this is something that if you still like this stock, you could consider it. So this is how you can build a list that you have more, because what the scanner does, the scanner only shows new signals, not the old signals. And here's why. Because let's say that you had 4 stocks that popped up, 3 of them you didn't like. And you already sorted it out today and you said, no, I don't like it, I don't like it, I don't like it. I mean, to me, it would be frustrating if those stocks would show up again tomorrow just because they didn't trigger. So this is why in the scanner, we're only showing you the new signals. But a signal is valid of up to, Mark, I believe we have up to 5 days, right? That the signal is
Yeah.
valid. Yeah. So here it is still a possible short signal. So if you had a stock that you liked a few days ago, you can still try to enter today. Did you
Yeah,
have
and that's where the watch list really comes in handy, Marcus. Not only for the new signals, of course, but also once you're in the trade to quickly check each day to make sure that there isn't a signal to exit. I know that that question comes up sometimes, and then a trader will say, "Hey, it didn't hit its target, it didn't hit its stop. Why is there no longer an open position?" And it's typically because there was an exit that the software generated and suggested because of the crossover. So make sure you're working with the watch list, but it's perfect for both exiting and finding new signals if you see that there's a stock that you really like. So yeah, what do you think about this one, Marcus?
Well, that's an interesting one. Let me just quickly answer Johnny's question here, because Johnny is asking, so do you use the original signal or change it to the new signal? This is still the original signal because we are using the first signal bar here, and we want to go below the low of the first red bar or the first green bar above the high of the first green bar. So this is still the same signal, Johnny. It's the same signal that we had 2 days ago. It's the same signal that we had yesterday, and it is still a valid signal for today. Is this making sense? So it's still the same signal. So yeah, about this one, that's definitely an interesting one because it has I mean, when we optimize it, an extremely small stop loss. You see, it's less than an average daily range. It's less than a day's move. It's only zero point 0.8. So the idea here with this stock is that if it breaks out, it really has a nice run. So here we are looking for a profit target of $3.16. So the idea is once we break below the 13.99 here, that we go all the way down pretty much to what is it, 10.50, which, as you can see, for this stock, very, very possible. So this is one of the stocks where you risk just a little and try to go for a home run trade. That's why it has only 7 wins and 16 losses. So the winning percentage is a little bit low here. It's only 30%. But as you can see, the average loss is $100 and the average win then 423. So I mean, it's one, as you said, Mark, it's one of the things. If right now you want to take one of these home run trades into your portfolio, you can do it. I personally like the more consistent trades. I know, Mark, that you every now and then like to trade one of these home run trades, right? Where you risk a
Sure.
little and try to go, hey, let's see.
Yeah, yeah, and I mean that's the thing. If you're looking at it and you see that it's a home run trade, I mean, even if you like the idea of putting on a home run trade, but you don't want to use your normal position sizing, you could trade half the position that you would, you know? So there's a few things that you could do if you want to add it. With the home run trade, you have to recognize it as that. But there's also the potential that you get a move that's maybe 1 times the risk or 2 times the risk, and then you do get a black bar crossover exit too. So there is a potential to get out earlier and not get that big move.
All right, let's see. So there's another question. What about when the chart shows that there should have been a new entry, but the software shows a new signal? I'm not quite sure if I understand this question, Mark. What do you think? Is Johnny asking here.
You know, Johnny, I saw the message that you sent earlier, and please send me some screenshots because I am not seeing what you are seeing, and I want to make sure that we're on the same page. And for that to be the case, that screenshot will help.
Yeah. All right. I just right now received an interesting comment on Facebook, and I want to address this really quick because it's very interesting. So the comment says, I imagine, Marcus, you've heard the old saying, you can do as well as most traders by taping the newspaper business section onto a wall and throwing a dart onto it. So, okay, so basically what he's asking is it possible to do better than throwing a dart? Okay. Now, if you go back to the 90s, where the market was just going up, 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 absolutely, you could throw a dart. And if you look at these days here, I mean, we talked about it the other day. Let me just bring this up and let me go back to the Dow Jones or S&P. It doesn't really matter. And we look at the monthly charts, right? I mean, right now we are just going up, up, up. So right now it almost appears this way that you could throw a dart and the market will go up. But boy, I believe this is subject to change. And I believe that many investors who are right now got very complacent and say, you know what, the market is just going up, are in for a rude awakening. Mark, what do you think?
Yeah, I agree, Marcus. I mean, this is what happened in the late 90s going into 2000, 2001, 2002. It was so easy to make money trading stocks that everybody jumped on board. It's like your cab driver trick or filter there. And so when everybody feels that it's easy, and it is easy, and you could just throw a dart and just pick something and just hold on to it and everything's okay, people get complacent. But then you get a correction, and then those are the people who are losing half their portfolios. And that's definitely not what anybody wants, but that's what happens when there's that complacency and overconfidence and thinking that you could just throw a dart at a newspaper or let monkeys pick your stocks and that everything will be okay.
Right, yeah. So I still believe that as an active trader using the right tools, you can run circles around throwing a dart. Oh, by the way, Mark, did you hear about the bet that Warren Buffett did 10 years ago? I think it was in the news this morning. So the story says 10 years ago. So this was in 2007, right here. Warren Buffett made a bet and said, I bet that in 10 years from now, the S&P will outperform the average the average return of most hedge funds that are out there. And he bet $1 million. Have you heard about that?
I didn't catch that, no.
Yeah, because today marks the anniversary of that. So this is where today, I mean, everybody looked who was right, Warren Buffett or all the hedge funds. What do you think?
You asking me or the group?
Everybody. So ask the group here. What do you think? Who was right? Is the S&P over the past 10 years, did the S&P outperform the combined performance of the hedge funds? Or I think it's the average performance of hedge funds. After commissions, that's the important thing, after commissions. Yeah, you got it right. S&P was better. Buffett was right. Yep, Buffett was right. So it is surprising that the big guys who supposedly are managing your money, right, are doing better than the S&P. No. And you know what? Then today somebody said, actually another hedge fund manager said, hey, you know what? You want to take the same bet? And Warren Buffett said, you know what? I would, but by the time we need to evaluate this bet, I would be 97 and nah, I'll pass. So that is the only reason why he said I'm going to pass because he said, quite honest, 97 is kind of pushing it. So anyhow, now what does this mean? It just means that if you trust your money to the big guys, I mean, this is where you might as well just leave it in the market. And this is where I believe as active traders, you have a huge advantage because you can shift money around much quicker. Do you think a hedge fund can get in a stock and out of a stock as actively as we do? No way. I mean, there's
Not
absolutely
at
no
all.
way. They cannot do this. Do you think they can trade options as we do? Absolutely not. And this is why you as private traders have a huge advantage over the hedge funds and also over the overall market because the retracement is coming. So we'll see. All right. Anyhow, so that's what I had this morning. And Kevin is asking, what odds did he get in Vegas? I don't know. I don't know. I'll look it up. So okay, Scott is asking, do you believe in the melt up theory? When we see a crash, but before there will be probably selling new highs of 30,000 to 50,000. You see, Scott, I trade what I see, not what I think. And we talked about this. What I see on the chart right now is giving me all warning signals that a crash is coming. And you see, we're not the only ones warning. I mean, if you look in the media, Tony Robbins says the next crash is coming. Robert Kiyosaki says the next crash is coming. There are big hedge fund managers who say right now the next crash is coming. And everybody is expecting it to come soon. I mean, Mark, we talked about it yesterday. What we see in the markets right now is something that we haven't seen since 1995. Yeah, well,
Yep.
for a reason. Okay. So anyhow, you guys are doing great because yesterday we also asked who is having a trading log here right now, and more than half of you have a trading log. So this means that probably also more than half of you have a trading plan, and that is fantastic. This is why we like hanging out with you here in the mornings because you are an elite group of traders that who is very, very prepared for the next crash. I mean, you will know how to make monies, or you're knowing how to make monies in a bull market as we have right now. Also, how to make money in a bear market, and extremely important, how to make money when the market is just going sideways, as it did in 2004 and 2005. The market did not go anywhere. Same in 99, 2000, 2002, right? And you are prepared for this. All right, fantastic. Well, this is all we got for you today. And thanks for joining us. And you have a fantastic weekend. And we'll see you again next week. Enjoy your weekend.
Yeah, happy trading, everyone, and enjoy the weekend.